Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar-yen pull off quite a bit here. Let me move this out of the way. Did go on and come back right into this 1034. We'd actually posted some Asian analysis here, and there's actually 2-hour support at 1024. Actually, I was trying to go bid there. It was, other than just a very little bit, I missed a pretty good chunk of this entire move. I didn't want to chase it and probably should have just gone and done just that. But taking a quick look at it, it says the dollar-yen slid in early U.S. trading and barely looked back. Resistance comes in at 1079. Downside target is 1002. Daily support comes in at 1034, confluencing with the 50% of 956 to 1113. So we'll just move right into there. So you can see what we're referring to as far as this daily support, this 1034. We already had this marked up before we even did the Asian analysis. I didn't think we'd make it all the way down here immediately. There was some support that I talked about in the chat room on the way down in early U.S. trading. Now we can take a look at that here. They came in at the 38% at 1052. Remember, we were talking about that on the way down. Actually, I did come in then and had shorted it and covered just before that 1052. And I actually thought that we'd get back up here maybe to about 1089. Great fill by Blake. He got short at 1080. And I just got too greedy. I mean, I actually had my limit at 10. I think it was 1082. And then when the market came here, I think we stopped at 1078 or something. I thought when we did back, I thought, okay, we're going to reassert ourselves and probably squeeze it up to about 1089. I thought that's going to play in just perfectly. Well, I got a little bit too greedy there. And I guess maybe if I'd have kept the 1082, well, I still probably may not have been able to get that one here. But my initial one was 1082, and I moved up to 1089. Blake got short from 1080 and just grabbed that thing. And great job there. And I just missed this whole move thinking, okay, it's going to bounce back. Although I did get short the SPOOs for a little bit, not a whole lot, but I use that kind of as a substitute. We're actually with the SPOOs much lower, so probably would have done better to hang on. But I thought, well, just in case. But really, if you think about the US data that came out, probably at that point, I don't want to say it was safe, but you would expect us to move lower, and I thought we were going to move lower. And even when the SPOOs did rebound a little bit later on, because I remember saying 27.49 is some resistance right there. We actually got up to 52, and that was at an area where just about where I'd taken the short. But he did get pushed up a little bit higher in the day and came back in. But the thing is that even when the SPOOs pushed higher, the dollar-yen wasn't even paying attention to it. Now that being said, I did go on and post this in the chat area last night because we did have the 1034. Okay, if you look at it on the 2-hour chart, I thought we'd get down here to 1025 and then pop up. Well, we I actually went bid, but we didn't pop up very much. I mean, as far as initially coming up, and I ended up canceling the order afterwards. I told you I don't like to have stuff sitting overnight, even though it wasn't going to be too much, because as weak as this dollar-yen had come in, I thought, well, that's going to be a good area. Well, I thought we'd be able to come down here, maybe come down to 1024, 1023, and then pop up. Well, we did have a little bit of a pop up, but I never got filled on that. And I was up pretty late in Asia, just moving computer equipment around, making it easier for me to work with. But anyway, that being said, you can see here where they find the support here that we posted on the Asian analysis. I know a couple of guys got long. One of the guys got long right there, I think right at that 1034. So hopefully maybe he was able to go and scrape a few pips out. But there's our 1034 right there. Daily support, daily support low. Did see the dollar index come back. And even when the dollar index was coming back, we couldn't even get the dollar yen to move even higher. So, I guess probably was a good indication that we'd move even lower if you think about it. Because even when the dollar index was trying to rebound, we weren't getting any support from the dollar yen, and then the SPUs, they themselves were rallying higher at the time. Same thing here. We couldn't get any push. Now, like I said, we've really rotated lower here, but that was a concern there. With that, we're just going to move into the news, and then we're going to get started on the analysis. Very quiet, as mentioned, overall. Euro's kind of eased back, and we're just sitting here still, below the 1285, but still holding up well above 1250 to generate some, further downside momentum. So relatively quiet, but let's go and move into the news. And on the morning bid, Spain may well be entering a new period of political uncertainty from today, as it is widely expected Prime Minister Pedro Sanchez calls a snap general election later this morning. After losing the budget vote this week, his minority government has even less leeway exert power than it did before, making a vote in April more likely. Gone are the days, however, when Spanish voters would comfortably return to either one or two of the main parties. The outcome is likely to be a hung parliament. That would then involve weeks, if not months, of negotiations to form a viable coalition. One of the novelties this time could well be the emergence of a far-right party, Vox, as a kingmaker, if ultimately chooses to back a right-leaning bloc. Catalan parties, meanwhile, have to reflect on whether they ultimately throw in their lot with Sanchez to avoid a right-wing victory, knowing that such an outcome would be a setback toward their push for more regional power. We're seeing the euro lower, but we haven't heard, other than some general news about this, it doesn't appear to be a headline as far as it's dragging the euro as it has in the past, not dragging a lot, but put like a downside pull on it. And we haven't really seen that, so it'll be interesting if the euro pushes lower, maybe they reference this, but it certainly hasn't been over the last week and a half. French European Minister Nathalie Lassois has neatly summed up the view from across the channel on Brexit mess, urging it to hurry up and make up its mind what it wants. The latest parliamentary defeat for Theresa May, however, undermines her inability to secure a majority in the fact that she has lost the faith of her fellow conservatives at both extremes of the Brexit argument. Meanwhile, she is coming under increasing fire for delaying the final vote, a tactic critics say is essentially one of running down the clock to force lawmakers to back her risk no deal. In 2 weeks' time, they will again have the option of backing a parliament option to stop the clock and force an extension of Article 50. There are signs that this will take it. France will be sending an ambassador back to Italy today, just over a week after he was recalled in protest of a tirade of insults hurled at Emmanuel Macron by Italy's populist government, and it's now giving the backing to the Yellow Vest street protests. Franco-Italian relations will take much longer to heat on, not least because there'll be further temptations for Rome's politicians to knock Macron as a campaign for the European parliamentary elections in May. We all thought the United States has the bright light in the gloom of the world economy. That light has clearly dimmed. Yesterday's retail sales shocker showed sales at their slowest in a decade, even if they were for December. Another set of data showed that the 4-week average of jobless claims is now 1 week higher. That effectively dissipated any optimism generated by Thursday's upbeat Chinese trade data. Host of the trade talks and some good company earnings. This morning's Chinese data are heaping more misery, showing factory gate prices slowed for their 7th straight month. Wall Street came off 10-week highs last night, and while the world stocks are still on track for a weekly gain, equities are generally down today. Another issue watching the U.S. trade talks after White House economic advisor Larry Kudlow said no decision had been reached to extend the March 1st deadline for a deal. On the U.S. political front, Congress passed a broader deal to avert the partial government shutdown, but President Trump has not signed it and raised the prospect of an emergency decree if he does not get his border funding wall. Later today, More data will be parsed for clues on the economic situation. U.S. January industrial production and February inflation survey from the University of Michigan. In the Eurozone, investors will be hoping for an uptick in the new car that will provide relief to the battered auto sector. The dollar's pulled off its 2-month highs against a basket of currencies and fell against the yen. The trade-reliant Australian New Zealand dollars have also lost ground, and already weak sterling doesn't set to reach too much after UK PMA lost as expected a parliamentary vote. Goldman Sachs sees a 50% of May's deal passing. JP Morgan expects Brexit to be delayed. The currency is hovering around 128 after failing almost 0.5% to 1-month lows. The weakest factory gate inflation September 16 from China is set to do more damage to European stocks. Results from Alizon in line with expectations were helping the German issuers shares inch up 0.7% in pre-market trade. And we're just going to take a look where we stand with economic data, and we'll just move on to that. Because really the other news here was just a reiteration here with the, well, here it does say, obviously the sharpest drop since 2009 in those retail sales have really put, these markets a little bit under concern. Same thing with PMA losing that vote. So no real news there. And we already mentioned about the dollar. Well, German car retail sales registration did go in and bounce back up, and UK car registration sales at 11.70, prior minus 2.2, 9.2. Did get some Spanish inflation down minus 1.3. Now, as we move in at the bottom of the hour, UK shoppers seen spending more in January after the weak Christmas for retail sales. And coming into the States, we do have industrial production. And I believe there was a reference also supposed to go on in as far as the University of Michigan, but I don't see that listed here, and I don't believe that is. Let's go and move this out of the way. And let's go and move into the analysis. So we had 1298 as our resistance yesterday here for the euro. And we're still holding it below this key 1286 that you can see here. Really, the door's still open for this market to go and challenge down to 1219. The surprise to me has been that we've been able to maintain this hold above 1250. I'm not sure what's holding it here. Now, if you look at this, one thing I did want to note here, remember we kind of referenced this yesterday and we're seeing that here. Look at how far the spread had become in the exponential moving averages between the slower and the faster one here. And this is about the time we saw this reversal. Well, yesterday it looked like we might see a reversal. But remember, after we saw this bullish engulfing line here, and I'm talking about engulfing the body, we turned around and saw the same thing the very next day. And now we made a move here, probably would be almost like 50% of this body. And now we pull back. But the key thing is we're below the 1286. Yes, Amanda says Spain elections are called. Yeah, and that was already, we referenced that. That was already expected to be done today, snap elections. So it's not a news mover, so I wouldn't expect the euro to even move very much on this. Now, going back in here, let's go and take a look here on the 2-hour chart. Yesterday I posted this. We had 1309 here, and I think this stopped it. I think it stopped me one tick ahead or something like that at the 1309 before we rotated lower. And we're starting to slide back again. But once again, there's no real news here. I mean, there's pushing the Spanish snap elections. Those are already expected. Like I said, we already covered that in the news, so that's not going to be a big driver. We're holding right now at this 1268, but for now, if we were to rotate lower, really the market is going to go shooting for that 1219, and the only thing that you'd have in a very short basis, here's the key we talked about here, and I think we take a look on here. It's 1219. There would be a pause around 1234, but can you imagine on a Friday we're even breaking to new lows? No one's going to stand in the way, and it's just there she goes, 1219, and we have to stay. We're going to just stay with the 1219. You can make the case if you were scalping this thing as well. I'll just keep buying it against 1268, because you can see this market trying to make a hold here at 1268. But if you break to these new lows on a Friday, nobody's going to get in the way of this thing, I would think, at all. So we're just going to stay ahead with 1219, and on the resistance, we're going to stay with, well, not stay with, but we posted it in the chat room. I remember yesterday morning I was able to grab a short against that, which was at 1309. Before we were getting there, I was saying, okay, look, it's 1309 for resistance. I think I may have pulled this off of the 30-minute at the time. I remember posting that chart, and there it was, 1309. And that's what we ran to. We took it out by 1 pip and then turned around and rotated lower. Well, that's going to be the resistance right now. 1309 here in the euro. And let's go move into the cable. Cable continues to remain under under pressure. This was our area of support. Remember this 2820. I think yesterday we were just a little bit below that time, and we kept it there. We said, okay, we're going to stick with that. That's what we were looking at from before. That eventually, when we were up here, we thought this is the area where they could go to. Well, they did go there, and they've gone beyond. So where do we stand right now? Let's go and take a look at this on a fib. Well, we come right here into the 50%. And let's move this down here. And that's 27.96. Now, the reason this is key here, and hopefully, but I'm saying for those that are, and look, we got a little bit of good support here too, is because when you came down here to the 38%, you didn't really see much of a reaction here. Well, we said it bounced off of this, but remember we'd overshot this, but there wasn't really a hold. So you would look for the next one. If we had seen a bounce off the 38% and it rallied back up here, then if you come down here, you're not expecting to hold then at the 50%, you'd shoot for them for the 61. Well, we didn't see much of a bounce here in the 30%. They bounced off of this, but there was no follow through and we rolled back. So you'd shoot for the 50%. So we're going to go with this for support. And you can see coming right across here, and we're looking at these daily closes. Key area right here, 27.89, right there. There we go. Right there, 2787. So we're going to go, and there's 2796 is a 50%, so a bit of a confluence. So we're going to go right there, 27. There we go, 27, right there, 2787 for support. Really, this whole area, look at that, coming across here, some good volume in here, which is 2779, basically 2780. This is all a good area of demand. So I would expect this market to try and make a stand here. Now, whether we rally or not, the only thing is now the exponential moving averages have turned lower, but probably see a little bit of some short covering coming in here. Only thing is it's a Friday, but we'll see how she holds up. Let's go in and take a look at here on the 2-hour. That's a long ways to go, but resistance would come in right there, 28. Right here. There, 2860. We're going to give it the benefit of the doubt so far, but it's about ready to turn from being bullish to more range as we're starting to rotate lower. Got to hold this 50% here. If we start to dip below that, then it'll actually go bearish at this point, but we're almost like a range in here. And let's go on and move on now to the Aussie. We're just kind of biding our time here in the Aussie. One of the things that we talked about here, now they're with the U.S. and China talks. Whether they're going to come up with something or not, we don't know. S&P's already pulling back. And Blake has talked about this quite a bit. He'd be selling the heck out of the Aussie on any kind of good news. And I think a lot of other people will be doing the same thing too. They could announce something over the weekend. I mean, let's say late today or maybe after FX is closed, and we could end up opening up on a Sunday right up in here. We're going to stick to right in here. It's going to be 72 cents. What we were talking about is if they were to rally. Now, where are we at right now? It's 71.42. Nothing has changed. But it's going to be right here, starting for starters, 72.03. If they were to get some good news, I think they'll just sell right into this thing. Support on a short-term basis, right there at 70.74. Short-term basis. I don't see this market moving too much while the U.S. and China talks go. Let's go and go to the dollar Swiss. This market had been dead, and now we finally really started to get some excitement. People are talking about it now. It was so dead. There was a market that was just considered just dropping altogether because it had been so dead. But boy, we really have started to heat up a bit. So we're going to see what happens here with this dollar Swiss. I mean, Blake had done some work, a shot on face, and we're looking at it on a weekly where this thing could really take off. Well, we'll see whether it really takes off or not. Key would be right there at 215. You can see that. We can pull this back out. 260, basically 260, even a little bit higher. You can go as high as 293. This is very important here. Look, that would be key if we can stay above par 51. We'll close at the highest weekly close if we can stay above par 51. Right there, it's par 53. Let's go and move it into a daily. Certainly it has a momentum going with it. So maybe we're going to go that route. And you can see here that the exponential moving average is, certainly got that buy mode, and it's been riding that. And I guess we could go a lot higher. We'll see how that plays out. I know the SMB, they've actually been very accommodating, I'm saying, as far as their comments, really over the last, almost 2 months, but at least a good 6 weeks. So this thing could start to get a little bit of a run on it. For right now, resistance, I think we already had that marked off, 109. Yeah, 0108, 0109, same thing, but right here. Now we look at for support here. Dollar's still holding its own here, and the momentum's still going this, so it's really, we can start to push a little bit higher here. But keep an eye on this par 53 on a weekly close is going to be important if they can hold that. So if they push up, that being said, support on a very short-term basis will be par 28 on a short-term basis. And let's go move into the dollar CAD. I thought we had a pretty good chance to make it. Yeah, it was frustrating yesterday. I mean, I missed it, but good. I mean, I missed most of everything on this dollar yen, and really, because we were following that so closely, and I guess when it started to fall down, I guess at the point was, at that point, just chase it. Not necessarily chase it, but it looked like we had gone so far. We'd gone to such an extreme, if you think about it, that when it started to rotate lower, you would expect that we could go on and drop. And I guess I should have not necessarily chased it, just gotten short and stayed short. But another one here was honestly frustrating. I thought we were going to 33.56. We'd even remember we did the analysis and we were looking for 33.56, which happens to be, let's go and take a look here on the daily. We're looking for, look at that, 33.54, confluence with 33.66. And we made up as high as, what was it, 33.41 or 33.40. And I wanted to be a seller right here, and we got to get a little dip off of that. And they may still make it up here, but this is frustrating. But I tell you what, I'm not going to do anything today. I won't touch this thing at all because, look, once again, you look at it technically, it's holding up really well. So you come here and thinking, remember we did the analysis. So we said the next target, the potential move is for 34.18. But you'll see a good pause at 33.54, confluence with 33.56. So look, we get this big rebound. This is the jobs report, remember? So this market looks like it's going to pop up. We dip back down and we hold. Look how we hold 33.12. We make a run up here, but we didn't quite make it at 54. We come back, and this market could rotate lower, and look where we are right now. So, they may just barely pause. I don't think they're going to come here and then turn and rotate right back. We'll see what happens with the dollar itself. But really, my thought would be then if you're this close, okay, I'll give you what it's reminiscent of. Might put it in context. Remember, I brought it up many times before. Remember, we were looking for 1304 in the gold, and we kept making that move. We couldn't make it. We came very close to getting above 1300. We didn't. Remember, we dipped down to about 1280-ish, 1285 or something. We came back up and we said, uh-oh, this market's not going to stop at 1304 now. It's already done a lot of homework, pushing up against the ceiling. When it breaks, we're going to 1323. Certainly, we went to 1323. This isn't quite the same ilk, but that being said, look, we've already come here. We had the chance to go up here to 33.54. We dipped back. We held up and held the sellers. We came back up here. We almost made it. We come back down. If we get here, look at that, 1340, 33.42. Do you think we're going to stop for a 12-tick move? I wouldn't think so. So we break here. We're probably going to come up here maybe somewhere around 33.89, almost 34. So I have no interest in trying to be a seller, but at this point, but it was frustrating because I thought we were going to get there and I wanted to be a seller right there. And we did have a nice little dip, but now the market's recovered back. We'll see how it happens with the dollar index, but not a real good feel on that. Resistance, we'll call it 33.54, but certainly I wouldn't be. It to me, it would just be a pause and this, come up to this 50%, but not a real good feel on this thing at all. So we'll go here, 33.54. I'll tell you what, if you were long, not a bad area to lay a little bit off there or let it run beyond that. But as far as trying to step inside and sell this thing, no, I wouldn't be looking at this point. Let it go much further higher. Support now would come in. We've had this. Here's this 32.12. Let's take a look at it here on the 2-hour. Support comes in right there. I still don't like the idea. Well, it's not that close. It's going to come in right there at 32.36. One market to go and bring up that I was ringing the alarm bell on. I don't know about the alarm bell, but we'll get to that. Is the dollar MEX. And I don't know where I have. I mean, I had the chart up, and I've posted that several times, and here we go. And you can see here, this was a key area here for a couple of reasons. If you look here, you see how this is. Now, this is actually a long-legged doji. You see this chart here? Look at this right there. And we finished right smack in the middle right there. You see this bar here? Right there? Okay, so that's why this was key here, this level, 1946, coming right across. And this 1945.7, called 46, confluence with the 1946, which is 161%. And the reason I just happened to bring this up, because I always, when I think of the dollar CAD, I guess because of oil, I think about the dollar MEX. And that happened to confluence with the 161%. You see that? This is a good confluence. I didn't expect this market to come off like this. And I told you I just recently started to kind of trade it. But really, I've traded just a handful of times at best. But, I mean, just basically just scalping it. Trying to get a feel for this. Actually, if you look at this right now, look at this. It looks like it's coming up like a head and shoulders here. This is on the 2-hour chart, okay? But to me, I tried to share this because I didn't know it was going to fall off this much, but I figured it would at least come down to, probably maybe about 1931-ish right here. But boy, we've really come under trouble. And I know Greg is looking for, I don't know, something like 18 cents or something like that. I don't know. But we really are coming under some trouble right here. We'll probably start to post the dollar mix in the bias chart starting this next week. Where it goes now? Well, we're into some support here. Now it's a Friday, so maybe they could push a little bit lower down into the 19s, but a little bit of support here. If you look at this, let's take a look at the fib again. We've exceeded the 38%. Look at that. Just flying. Maybe we'll get a little bit of support in there, but it's hard to step in on a Friday, but if we make it down to the 50%, that'd be 1917. Other than that, I don't see anything per se on here. But boy, they've whacked him pretty good. Now let's go and move into crude. I always think right after I get think of the CAD, I think about the dollar max. I guess because then right after that, we just go right into crude. We did make it up to the 78%. Look at that. I guess I wasn't paying as much attention to crude yesterday, other than I was looking for that the dollar CAD to make it that 33.54. Boy, I was looking at my chops, and the thing is that it did rotate with a nice move lower at the time. That was frustrating along with the dollar yen. I didn't lose money, but I tell you what, I left a chunk of change on the table. That was just, and it never fails. You chase something, although it really wouldn't have been a chase. You end up, paying the piper. And this time it would have been sensible to just go on and grab it and stay short. I guess I just got too greedy. Like I said, Blake was right there with a nice fill at 1080, and I had a chance to take it myself. He posted it. And I just felt it was, it's kind of crazy to get greedy for an extra 8 to 9 pips, and that's exactly what I did. I guess I should have just grabbed it and hung on. But anyway, that being said, it is what it is. We move on to the next trade. So we did have a nice little Greystone Doji here on the 2-hour chart for the oil, and it actually confluenced here with us just exceeding the 78%. Well, what do we do here? Well, my guess is they're probably just hanging on to see if we get some good news from the Chinese thing. Same thing for the little bit of a risk on thing. I know SPOO certainly came off, and that may weigh in turn eventually, but it may just use some kind of a good news as a chance to rally up in here to this 55.25. But for now, resistance is going to be right there, 54.70 coming across. We'll leave the market. But once again, we may just hang on to see if some news comes out of China to boost a little bit of resentment. But you see it right there? That's going to be resistance, 54.70. Oh, we hacked it right. We did have it there. Okay, 54.71. We'll keep it there. Because we had remember we were looking at the 78% yesterday at the time also. Support. Well, I wouldn't look for this market to turn around and just sell off because I think they're going to expect them to get some good news, possibly out of China. Both countries need it, China as well as the U.S. So short haul, we're going to go right there. 53.62 for support, 53.62. There we go, 53.62. But I wouldn't really look for this market to fade off. I really wouldn't. But if you're looking for a downside target, it'd be 53.62. I was going to start trading crude. I haven't because we're starting to fire up a little bit on some of these pairs now. But I had looked. The only thing is when I trade crude, it's like almost I can't focus on too much other because of the way you get these herky-jerky moves. You really have to stay on top of it. So generally when I get involved with crude, I end up doing it to the you end up just not paying too much attention to everything else because these moves are so herky-jerky. They don't stay around for too long. And you're doing pretty good for the most part. I mean, I guess if you're short-term trading, if you can grab about 15 cents, 18 cents, you can do it, I don't say routinely, but you really have to stay on top of it. And let me go in and crude will wear you out. Get to a point where that's almost all you can see is just crude. Let's go move into the dollar yen. Well, this is frustrating in many ways. Sometimes what we all have losses, but sometimes it's the moves that you miss out on that are the most frustrating and just I don't know if about painful, but it just almost feels that way, almost as if I had lost money. Missing this move is just, but those things happen. Resistance, we did do an Asian analysis, and resistance is going to come in. We haven't seen nary a bounce here. I mean, we did see on this move, remember we had 1052 I was looking at, and we saw that bounce. And like I said, Blake sold it right there, 1080. Doggone, he just about top ticked it. He missed it by what, one tick or tick and a half. And he posted it right there in the chat room. I had a chance to get in, and I got a little greedy thinking with the spoos starting to bounce, which is probably pretty silly at the time. I thought we would come up here right there. You see that? Right there. I thought we were going to make it back there. Because what happened was we came down here, and when we stopped at 1078, I believe, and then we dipped back for a little bit, and we came back to challenge 80. And I thought, okay, if you're going to take out the high by just a couple ticks, I think you'll push it up, and it'll come right up in here to 89. And it was actually happened to be the 61%. And my initial level was 1082. I just got a little bit greedy, and I just didn't follow it. And I mean, I didn't follow it on the way down. I mean, I was following it, but we couldn't get much of a bounce. And even here, I thought, well, this makes sense here around 1065. Maybe you just ought to do it there. And I thought to myself, which is still pretty silly, I thought, wow, I had a chance to sell at 80. Now I'm selling at 15 pips lower. This doesn't make any sense. Well, later in the day, we kept rotating lower and lower and lower. Well, we talked about this. I've got daily support here at 1034. I posted this in Asia, was talking to a couple of guys, and I expected this to go on hold here. Overall, I'll put it this way. But I thought, you know what? If we can wash it out, because we couldn't see much of a rally, I thought, well, they're going to come down here to 1025. Well, I'll be doggone. It gets here down to 1027. And then we rally up, what, about 20 pips, and then we come back lower. Well, here's your 2-hour support here, 1025. So we'll just put 1025. Maybe we break a little bit lower, but on a short-term basis, our support. So, like I said, even when I tried to buy it lower, it was still I didn't even get filled. So resistance is 1079 now. And let's go move into the Aussie yen. Well, we've come off quite a bit here. Look what remember we were making this run. We weren't even that far from the 78% as the as the SPUs have rotated lower. The only thing I was able to do, like I said, I got short some SPUs, and I didn't even stay in it that long. Well, really, when it rotated towards the end of the day, I ended up wanting not to stay in it. Probably should have done just that. We've really come off quite a bit from those levels. I was short from above 50. I think it was 51 and 3/4. I think it was. That was pretty sensitive. The only reason I jumped in it because I was using it as a proxy for the dollar yen, which sounds crazy because the dollar yen, a lot of times you can use it as a, I wouldn't say a proxy, but follow so closely with the SPUs. But anyway, resistance at this point, you can actually make the case right here, but we'll just give a little bit of room to escape beyond that. 78.45. Which is just right below the support, which was yesterday's support. And we saw a good rebound. Remember, we had 40, what was he had 45 or 49, came down here and rallied back up here, but it was a good downside target, 45, and or 49 we had, and then we bounced up and then we've rotated lower. Support now, well, you can see the support coming across these volume touches right here, which is 78.07. And let's go move into the cash dollar index. This market's been very, very impressive. We've got this band in here, but I don't think it's as important as I think the market's going to have a tough time if it can close the week above 97.09. We can actually take a look at it on a weekly. On a weekly, there's not really 97.09 isn't as significant if you look at it on a weekly. A little bit more significance if we could close above 97.19. But on the daily, and we know on a Friday, I don't see anyone stepping in necessarily and fading the dollar on a Friday, although we do have some data that's going to come out. And certainly yesterday's data really put a dent. But look at this. We're back above 97 again. And the euro here, 12.80. It's just a little bit, you think about technically speaking, we're below that 12.86, but the euro has not pressed any, lower with any real significance. And the same thing here, dollar's just hanging around here at 97.09. Well, I think we're going to keep things in check until we get past this Chinese news. So maybe we're kind of stuck in neutral for a bit. But we're going to put our resistance here at 97.19 on a short-term basis. Well, actually, we talked about 46 being that rally area. If they push higher, I don't really see that being challenged, though, today. But we'll stay with this. Obviously, I must have gone and transpose those. Although, no, not really, because 97.64 is the breakout area. And we were surprised to see this thing come back so quickly. So it was 97.64, but we're going to go 46. That's just that interim. I don't think we'd break out on the dollar, but we could maybe, if they push a little bit higher, look for that 46 as a challenge. And there it is right there. You see that? Right there. Support. 96.82. We'll stick with that. 96.82. With that, let's go and move into the gold. This gold is really holding up like nobody's business. I will say this. I mean, we rotated back to this 1304. We had that little shakeout a couple of days ago. We popped it real quick and we quickly faded. And we faded as the dollar was returning back. This market sure acts like it wants to go a heck of a lot higher. And maybe we're going to be able to push higher if we get spoofs to rotate lower. My guess is same thing like I told you, these markets are kind of on hold. I'm thinking they're just waiting for this US-China news. If we get some good news, heck, it might even rally on that. But I think what they're holding at bay for is you get some good news, maybe the S&Ps rally up here to the 2760, and then if they start to roll back down, then we start seeing this gold start to move higher. So I think things are going to be kept at bay until we get past the China news. We're going to stay with this 1315. We've had that before. Support is going to be 1304. We'll call had 1303. That's fine. Here we are on the 2-hour chart. Quickly came back. You see here, but this had more to do with what we're starting to see here with the spoos and keeping that bid up. But I'm thinking, like I said, if we do get the good news out of China, gold may even push up a little bit higher and just hang around. And then if we start to see the spoos, if they rally, if we get some good news and they start to rotate lower, I think you'll start to see these trade inversely. But we shall see. Let's go on now, move into the bunds. Well, look at this on a weekly chart. We are still pushing hard. We know the news out of Europe has been woeful. If you look at it on a weekly, looks like resistance 67.30 on a weekly. You see that right there? Right there, 67.25. That's on a weekly. But let's go and move into a daily and then a 2-hour chart. $66.47. Right there, coming across. 66.54. So support's going to be 66.13 with resistance 66.54. That seems like quite a bit of a disparity right there. But these markets have been a bit volatile. It's really not that much if you think about where we are right now. So that you can see this little right here. It's going to be 66.13 and the upside 66.54. Well, we were looking for a move lower here. We got all the way down to 11,020. We're looking at 11,126. And we pushed even lower. Obviously, the S&P's really knocked it for a good loop. Resistance at this point would come in right there, 11,132. Amazing to think how much now we've slid down. Now things have rotated lower. Finally, it's going to be 11,132 for today. Obviously, this boost changed the complexion on everything. Resistance, I mean, support now, we can see it right there coming across. And that's where they went to, 11,020 for support, I should say. These markets may stay in check a bit with this China talk and see how that plays out. So we're probably not going to see any big movement per se. We can see the dollar index is just kind of hanging around here. Not expecting any big movement today. You never know. Look at this dollar yen just hanging right there. And we did have our there's our support, daily support 1034 and a 2-hour 1025, but we didn't quite make it here to this 1025. And we're staying relatively quiet at this point. So let me go and get this posted. Thanks for joining us here on the European crossover. We'll see you in the chat room.